Okay, that's 1:05 by my clock, so I think we'll start here. I just want to give a warm welcome to everyone who's attending today. My name is Brad McDougall, and I am the OnQ Professional Development Coordinator. Thanks to a federal grant from the Canadian Performing Arts Workers Recovery Fund, administered by Canadian Heritage, OnQ's incubator program in 2022 to 2023 will include 3 professional development opportunities intended to serve a range of performing artists working in different disciplines at different stages in their careers, and both within the City of Regina and provincially. As part of the incubator program, this is the 5th in a series of online professional development workshops. OnQ Performance Hub is a new nonprofit arts organization with a new organizational model and approach, offering a collaborative producing model serving local artists and diverse audiences in Regina and beyond. Our aim is to enliven Regina's downtown core and activate connections between performing artists, businesses, and audiences. We bring together artists across dance, music, theater, and spoken word. Our goal is better retention of creatives within our community through a supportive environment that facilitates innovation and the realization of creative ideas, while providing practical professional development of the business and administrative skills creative entrepreneurs need to survive and thrive as independent artists. OnQ Regina is grateful to be working on Treaty 4 land, the territory of the Nahiawak, Anishinaabeg, Dakota, Lakota, and Nakota, and the homeland of the Métis Michif Nation. We also acknowledge the people of Treaties 2, 6, and 8, and 10. We recognize that the past and ongoing harms experienced by these people and embrace a mandate to work with them in fostering greater understanding and a better way forward. So along with us today is Sandra Jackson, CPA, to talk about accounting and taxation and to answer your questions. Also with us today is our 2 ASL interpreters, Barb Froese and Brandy. I should have your name up here and I don't have it. Why don't I have it here? Silly me. Anyway, Brandy is with us. Hurrah! Here is a little bit about Sandra. She received her CGA designation in 1992 in Toronto while working for what is now the Canada Revenue Agency. She moved home to Saskatchewan in 1997 and worked with a bookkeeping company. In 1998 for a tax season and loved it so much, I bought the business. That sounds like, what's his name, Kayam, who bought Remington. I have grown the company from 2 full-time employees who are still with me 23 years later, and 8 full-time employees and a student from Sask Polytechnic during the tax season. We service about 1,000 individuals for personal tax returns and about 500 businesses, including proprietor and corporations. We are a full-service accounting firm, including payroll, bookkeeping, personal and corporate tax returns, and review engagement statements. She has facilitated classes for individuals considering starting their own business, including how to organize the business, the importance of bookkeeping and tax implications, including income tax and sales tax. Many of these students became clients. She has also facilitated tax discussions with various groups, including arts organizations, seniors, and CNIB members. Outside of work, Sandra enjoys reading, walking, traveling, and camping. So now just a few house guidelines. I think if you put any questions that you have in the chat, and we'll have plenty of time to either stop and take your questions and Sandra can answer them, or we can take them a little bit at the end. But anyway, you will get your questions answered. So now I'd just like to turn it over to Sandra. Thank you.
Thank you, Brad, and thanks for inviting me. I always get really excited about taxes. So if I get too excited, feel free to, tap me on the head and say not so much fun. I also realize that not everybody loves this, but I hope to give you some practical information and guidance in how to kind of go around the accounting piece and taxes. I think we don't have like a huge crowd here, but is it safe to assume, maybe Brad, you can answer this, that everybody is independent and self-employed, and we're not talking about corporations or partnerships? Is that fair?
I would say that was very fair.
Okay, all right, good, because corporations are a totally different seminar and a totally different animal. So I would welcome questions at any time, and if I can't see that a question is trying to be asked, Brad has promised to pipe in and let me know. But certainly ask questions whenever you have them. And I'm sure there will be plenty of time even at the end to kind of go over some other questions if you have anything that I haven't touched on here. So here's what I intend to go through. Sort of an introduction to record keeping and the importance of it. I'm going to go through the details of what would be on a business statement that would go on your personal tax return, and including eligible expenses and some that are limited by CRA rules. A few tips on dealing with CRA, and then some other sales tax considerations, GST and PST, and then obviously questions, but you can certainly ask them at any time. So record keeping, I'm sure nobody enjoys doing it, but regardless of how your business is organized, it's fairly important to do the record keeping, and particularly for a small business, and it doesn't have to be fancy or complicated. You just need to get the information that you know you're going to need at a later date. So it's the process of recording transactions in an accounting system. The accounting system, again, does not need to be complex. And you take your company financial transactions on a regular basis, and evaluate for key operating, investing, and financing decisions. I don't know how necessarily important, all of those are for independent artists, but you probably do at some point want to know how you're doing and where you're going with the business. So it's good to be able to kind of track it a little bit. Yeah, the principles of accounting rely on accurate information. I say just do the best you can. So the importance of it is to monitor the success and ongoing business that you're doing, to have timely financial records. And believe it or not, meeting your tax obligations is probably the last reason that you do it, but also an extremely important one, because you have to prove what you're suggesting to the government. So in the case of a CRA audit or review, they may just do a desk review. Accurate record keeping makes the process much easier and able to provide all the required details in no time. And the sooner you get the information to them, the sooner they get back to you and say, yeah, it's all good, thanks very much, and life goes on. Sometimes when applying for business bank loans or mortgages or even business credit cards, sometimes They'll want to have a look at your financial statements. In a lot of cases, it'll just be the income statement that's shown on your tax return. In some cases, they may want a balance sheet. Probably not that important for most people involved here. And finally, it will help mitigate risks such as penalties for non-compliance and ineffective accounting records. So it's generally a good thing to keep track of your income and expenses. So how do you do that? On a scale from least expensive to most expensive, we've kind of listed there the ways you can do it. So you can use an Excel spreadsheet. And again, it does not need to be complicated. I would generally suggest that you have one sheet for income and a separate sheet for expenses. That just, I feel like that is easier for most non-accountants to look at and see what they're doing and how they're doing with their expenses. QuickBooks Online or desktop is another option. And I think QuickBooks, generally speaking, is the most user-friendly for most people. For the online version, there is a subscription fee. I think there is for the desktop as well. So it depends how complicated you need to be. The online version, you can easily create invoices. Once you create the invoice, if that's what you're doing, you create an invoice and it gets recorded in the spots on the income statement where it's required to be recorded. So you just create the invoice and the accounting kind of does itself in the background. You can actually email that invoice to the customer, whoever the customer might be. And in some cases, they can just click on a button and pay it. So within 10 minutes, you could have your services rendered, your invoice rendered and the bill paid. And then Sage 50 online and desktop are also options. And then Xero is kind of a new online one that's come to Canada in the last few years. It's fairly robust and probably not likely going to be used by independent artists. So, and if you don't like any of those options, outsource your record keeping. Get yourself a good bookkeeper. And they can do that painful work for you. So tax implications. So I will just talk a little bit now about the income and expense statement that would go on your personal tax return. So the statement, we'll go through some of the limitations and then how you contribute to CPP and EI. So the income or loss from the business, whether you're a proprietorship or partnership, is included on your personal tax. Whatever the net income is there, including allowable expenses, is what you pay tax on. So if you happen to keep a separate bank account, say for your business activities, it doesn't matter how much you take out of that business bank account for your personal use or lifestyle, you're taxed on the net income. Yeah, sometimes that's a little challenging for people. They think if I didn't take it out of the business bank account, then it's not personal income, but it all is. So
Sandra, there's a question from Pam. Pam, do you want to pose your question?
Sure. Yeah. I was just wondering, is there any active support for any of those programs that you mentioned, in terms of, and whether it has to be subscription or not? Because I've been encountering issues where I thought, we'll have a program, but then there's a glitch in it and I can't get any way around it because there's no support.
Well, other than Excel, yes, for QuickBooks, for sure there is. Yeah.
Excellent.
And I will say, with QuickBooks or with Sage, if you don't have any luck with their support people, your accounting or tax professional should hopefully be able to help you get around some of those things too. So yeah.
Thank you.
Okay, you're welcome. So eligible expenses. So the general rule is that you can deduct an expense if it is incurred in order to earn income, with some exceptions that CRA has indicated. And generally, the income statement is recorded in accordance with the generally accepted accounting principles, which means revenue is recorded when it is earned, not necessarily when it is received, and expenses are claimed when they are incurred or used up, and not necessarily when they're paid. So if you have, and probably most people will be January to December calendar year, income earned in December, for example, you have to include it in that year as income, even though you don't actually receive the payment for it until January. That's what we call accrual income. And it's cruel for non-accountants to have to use it, but that's the way it is. But then conversely, on the expense side of it, you could have some expenses that you incurred in December in order to earn that income, but you're not actually going to pay for it until January. Maybe a cell phone bill or something like that, or a subcontract or somebody that you're paying to help you do something, and you don't actually have to pay it until the next month. That would be expensed in December. So that's what we call that's the sort of the generally accepted accounting principles, and that's what the tax system is kind of based on. That's where you start. So you absolutely must keep receipts and detailed information so that you can properly classify. You can classify them, or we can, whoever's doing the bookkeeping for you. Also, if you're audited or reviewed, this is the proof that they're looking for to confirm that you're eligible for that expense. Oh, sorry. I'm just going to go back here a second because I made some notes here I forgot. So what constitutes a receipt? So a credit card slip or the credit card statement itself is not a receipt. And if you give that to CRA, they're going to give it back to you and say no. No arguments, no chance to change their mind on it. So a proper receipt needs to show the date, the name of the supplier, the store, the restaurant, the vendor, what was purchased, itemized, and the total amount, including the taxes. So the GST and PST need to be shown separately on it. And in some cases, depending on the value of the items purchased, it'll need to show your name on it as well. And if it doesn't show your name on it, you may need some kind of documentation to prove that you paid for it. If we're talking small amounts, nobody's going to care if you've got the receipt and it looks like it came out of your bank account or credit card. Then you're going to be fine. But if it's a $5,000 asset, or if you're buying a camera or equipment of any sort, you may want to see, you're going to need to see your name on it to know that you paid it. Okay. So I think the important thing here is to know that that the credit card slip, the debit receipt slip that you paid by debit, that doesn't cut it. You need more information than that to confirm that it's your expense. So here's a list of the usual categories that you will see on a business statement. So would be typical expenses. And just because it's not listed here doesn't mean you can't claim it. And some, do I have office supplies in here? I don't even see office supplies in here. It would sort of be a catch-all, could be a catch-all for most other things. Okay, so advertising, this is going to be any promotional marketing, I don't know, like Facebook ads, anything like that. If you do gift baskets and give them away, anything like that would go in there. Anything other than meals or entertainment that you're participating in. The allowance on eligible capital property, we don't use that one very much anymore. Bad debts, one would hope that you don't have bad debts. That just means that you invoice somebody, claim the revenue, and now they're not paying you and you can't collect it, so you're going to write it off. If you're starting business, most of your startup costs are going to be eligible here, other than if it's a capital asset. Business tax fees, licenses, dues, memberships to any organization, either that you're required to participate in order to do your job, or would give you like a group of like-minded people, or somehow it supports the business that you're operating. I am going to talk a little bit more detail in a bit here about the business use of home expenses. The capital cost allowance, now those are the assets that you purchase, computers, cameras, anything that lasts longer than a year. It generally will go into the capital cost allowance schedule, and you will only claim a portion of it each year. And I don't actually think that I go into too much detail on that. For 2022, CRA has come up with what they're calling immediate expensing of assets. So not buildings, not vehicles, but sort of your general assets, I don't know what to call them. Then you would be able to claim 100% of the expense when you purchase it. It has to be purchased in the year and available for use, and it cannot, it has to be an arm's length transaction. So you can't buy it from a relative, or have purchased it prior and just started using it in the business. Those would not qualify. But if you need to get a new computer, you can claim the full amount as an expense in the year. You don't have to, you're not required to, and there may be other reasons why you don't want to claim the full amount in the year. But that's just new this year. Delivery, freight, and expense. Fuel costs except for motor vehicles. So I'm going to suggest probably most of you will use the motor vehicle expenses rather than this fuel cost. And I will go into that in a bit as well. So insurance would be for business insurance, interest and bank charges, interest on bank loans, business loans that you, or credit cards. If you don't pay the credit card off, you've got charges there. If you have a separate bank statement, a separate bank account for your business. You'll have some bank charges there that would fall into that category. Legal, accounting, and other professional fees, maintenance and repairs of the equipment that you have, management and admin fees, probably not a lot go in there, to be honest. And then meals and entertainment, the allowable portion only. And I think I go into this one a little bit. If I don't, I will come back to it because it's a little bit important. So your vehicle expenses, there's only one way that you can claim vehicle expenses as a self-employed individual. And that is based on actual expenses and the percentage of business use. So you really need to keep a log of the kilometers that you've driven for business. You need to know the total kilometers the vehicle was driven in the year for business. And that is the percentage of the vehicle expenses that you can claim in that year. Now that percentage can obviously be different year over year. Some years like 2020, 2021, probably not very high vehicle usage, as we weren't allowed to go anywhere. But some other years you might use it more, you might use it less. But that's you need the log, and I can't stress this enough. You need to keep a log. There are apps that can be used that will help track your mileage for business. One of them is Everlance, and the other one is Mile IQ. And I believe the Mile IQ is got CRA rates kind of embedded in it, and CRA's kind of blessed it. So the reports that you can get from it are exactly what CRA needs to see if you're needing to prove your mileage. And I believe the way that it works, I've downloaded both of them and I've never used them because I don't really go very many places other than work and home. It's the boring life of an accountant. But so if you put it on your smartphone, when you get in the vehicle, I don't know, you say start, something like that. And then at the end of the day, you get home and you swipe right if it's for business or left if it's for personal. If it goes into the business, at the end of the day, week, or month, whatever you choose, you can get a report and it will give you what you need to have to confirm the mileage, the business use. So it'll have a date, it'll have a destination, the actual address, where you started and where you went. You may need to put in some kind of a description that says what business was being conducted, right? So in my case, I would say I went to a client to have a meeting. Or if you come to my office, you would just say accountant's office for tax meeting or whatever. Doesn't have to be a long story, just something, right? And it could be for, a potential job for you. Even if you don't get a job out of it, it was the purpose of the trip was to try and do that. In the past, I know CRA has kind of, or some accountants would say, well, you could just recreate the log if CRA is asking for it. They're less inclined these days to allow you to do that. They don't like you to make things up, I guess. I don't know. So I just strongly recommend, if you're going to use your vehicle for business, please make sure that you have a log and do it as you're going along. It's really hard to recreate it and get it accurate. And with these apps, it's easy breezy. And I don't think there's any charge for those apps either, although you can pay for some additional things that they do, up to you.
Sandra, Pam has a couple of messages. One might be answered, but there's a second one there. Pam?
Hi, I'm just wondering, as somebody who doesn't carry a smartphone, is it possible to be using these apps at home on a tablet and just record how much mileage was spent that day, kind of thing, each day? Or is it only work by proof of, hey, this device has traveled this far? You know what I mean?
Well, I think those apps only use GPS. So I think you have to have them in the vehicle for them to work properly. But certainly, as an alternative, if you're inclined to do this, just keep a paper in your vehicle. Write the date. You can write in the odometer beginning when you start the day, and the ending when you stop the day, or for business use. And then just make sure that you write in the addresses of where you go. And that should probably, because what do they want? They want the date, where you went, reason for business, kilometers driven. Yeah.
And apologies, I might have missed this, but are gas receipts still required? Because that's overlapping your personal use as well. So I was like, how do you differentiate that? Do you know what I mean?
Yeah, okay, so you record the kilometers that you drove for business.
Yeah.
You know the total kilometers driven in the year, that vehicle was driven in the year. It's that percentage of all of your vehicle expenses that you claim as a deduction.
Right. So I guess I'm aware of, in terms of the mileage aspect, how much you're claiming, but in terms of, I wasn't sure with the gas receipts, if that confuses things, because, say I got $50 of gas, but I only spent 20 doing the traveling. Do you know what I mean?
No, you bought $50 of gas, just for simplicity's sake, for the entire year to operate that vehicle. The business use is the percentage of the business kilometers over the total kilometers.
Okay.
So that's the reason for doing the kilometers, is to see what percentage of all of the expenses you're going to claim.
Okay.
And that's all of the expenses.
That percentage, as opposed to a tax approved percentage or whatever type thing.
Right. Yeah. So it's based on actuals, and it's all expenses. Anything you do to that vehicle is an expense. The repairs and maintenance, you change a wiper blade, your plates, your insurance, if you have a package policy in addition to.
And it doesn't have to be a business only vehicle for that?
No.
Okay.
No, it does not. No.
Thank you.
Okay. You're welcome. The only other thing, or a couple of other things that you can claim 100% that relate to the vehicle is parking. So if it's business parking, you claim it all. If it's personal parking, you don't claim any of it. And if probably doesn't happen so much anymore, but if you have to put coins into a parking meter, then just write that amount in your log or note it in your app that this was for parking. And also, if you need to have supplementary business insurance for your vehicle. And I'm not too sure when you would be required to have that supplementary business insurance. If you're concerned, ask your insurance provider. Yeah, but if you need that supplementary business insurance, then it's 100% deductible.
Sandra, I know that when I worked for the health authority, we used our own vehicles for a lot of that. And so that was one place that we were supposed to have insurance on our vehicles for
business.
Yeah.
Business insurance. Yeah. I'm going to suggest it's probably an employer that's going to require you to have that supplementary business insurance. If you're really just working for yourself, I'm not sure that it's going to be necessary. Yeah. Any other questions on Paul? You have a question.
Yeah, I guess that if you go and rent a car to go and do a job somewhere, it's much easier because you just add that that invoice, and then you add
The fuel.
the fuel that where you tank up at the end of it.
Yeah. Yeah.
Good. Thank you.
For sure. Yeah. Yeah. Any other questions with the vehicles? Okay. Home office expenses. So you can claim business use of your workspace from home if you meet one of these two conditions. So if it's your principal place of business, if it's you don't have an office outside of your home, you're not renting an office space anywhere, then you can claim the business use of home. And I'm going to suggest for the most part, this is where you fall, where you qualify to be able to claim the expenses. If you have an office space somewhere and also do some work from home, the only way that you can claim the home office expenses is if you have a space that is dedicated to your business and there's no personal use to it, and you use it on a regular and continuous basis. It's one or the other. You don't have to have both. So I'm going to say probably in all cases, it's going to be your principal place of business. Yeah. So the expenses that you can claim, heat, electricity, what have we got here? Power, heat, insurance, mortgage interest, or rent if you don't own, property tax, repairs and maintenance. And on the repairs and maintenance, I actually was at a seminar and a lawyer was speaking, and I just love this. It's when it comes to things like this, pigs get fat, hogs get slaughtered. So on the repairs and maintenance on your home, if you get too greedy with it, you're probably going to get caught up on it. You can be a little aggressive with it, but just not too aggressive. And that's with the repairs and maintenance to your home. But remember that there's a difference between repairs and maintenance and capital. So if you're reshingling your house and it is the same quality of shingles that was there, that could be considered repair and maintenance. If the shingles are a better quality than what was there before, then that's going to be capital in nature and you're not going to claim it. Other things you can claim on this percentage: water heater rental, security system. Pam, yeah, go ahead.
Sorry, I have so many questions about taxes.
That's good. That's good. Yep.
I'm just wondering, what if you're in a situation where you're, say, doing rehearsals, but of course it's not all year. So do you have to differentiate that, like, oh, it was just this number of weeks in the year, and then take that percentage out? And in terms of claiming, like, say you're doing utilities, whatever type thing, you know?
No, I would say not. So you're basically working from home for the most part, but you're in rehearsals. That means you go someplace else to do that, right?
Sorry, I'm talking about if people go to your place for it, you know, or if people are doing business at your place for a certain number of time, but then you don't need it for other times, you know?
But are you using it other times? Like, are you using?
Well, yeah, if it's your home, you know, you're still, you know, like, it's just a matter of, doesn't have to be the continuous use the rest of the time, as an example, you know, and I wasn't sure if that was getting you into hot water kind of thing.
Right, no, that continuous use, no, that's only if you have an office space someplace else that you normally go to.
Which is not
Other-
the case situation, yeah.
Yeah, right. So, yeah, so it doesn't matter if you use your home office for 5 minutes a month or 5 hours a month, or, you know, for 6 weeks straight and then not for a few days, like that doesn't matter.
Okay, excellent. That's so much less complicated then, so thank you.
Yeah. And then, so what percentage can you claim? So you calculate the square footage of the space that you're using as a percentage of the total square footage of the living space. Generally speaking, it's probably not going to be more than 10%. And if it is, then you need to justify it. You need to really do the work to justify it. So you'll have maybe a 10 by 10 area that you could say would be your normal everyday office, where you do paperwork, answer emails, you know, whatever, right? But in the case where you have somebody coming into your home to do the rehearsals, or you do some filming, or you set up a space in the basement where you're going to do all of this, then you can increase that home office percentage. You just really have to keep track of it and document it. CRA likes to see pictures sometimes to prove that you actually do use more of your space than that little, 10 by 10 cell. And I guess if you're doing it occasionally and not all the time, as in what I understood Pam to be asking, I would say then don't use that entire space all of the year, maybe half of the year. I don't know. Every situation I think would be a little bit different. And it doesn't have to be perfect. In fact, it won't be perfect. Just sort of try and come up with something that works and that you can kind of sleep with that night. Pam, yeah, go ahead.
Sorry, I just wanted to clarify on that. So just if I'm understanding this right, say you have a home office, you're only using the one room, let's just say 10 by 10 as an example, out of, I don't know, an 800 square foot home, just throw it out there.
Yep.
So you deduct that percentage of it, and then you take that same percentage of your utilities and things like that, or?
Yes.
Okay.
Yeah. So you would take all of, all of the eligible expenses, 100% of it is what you paid for, all of it. And then you claim a percentage of the total of all of that.
Great. Thank you.
Yeah.
Mary has
and Mary had a question too, sorry.
Yeah, go ahead, Mary.
Yeah, just trying to get myself unmuted here. So if the expenses that you have there result in a loss on your creative income, against your creative income, does that disappear after that particular tax year?
No, it doesn't disappear. No.
Okay.
But you are not allowed to use your home office expenses to create or increase a loss.
Make a loss, yeah.
But you can carry it forward and use it
in the next year
or 5 years down the road.
Really?
Yeah.
Okay.
Yeah, I don't think there's any limit on how far you can carry it forward.
Oh, wonderful. Okay,
Yeah.
thank you.
Yeah.
Yep.
Okay. Pam?
Sorry, that was just a thumbs up saying, thanks for
Okay.
how long can be used.
Okay. Okay. Can't tell the difference between a thumbs up and a hand. Okay, any other questions on the home office expenses? Again, it's not going to be a big number, so I wouldn't, get too bent out of shape on it. But certainly know that you can claim it anyway. Yeah. Okay. Meals and entertainment. So CRA, I say this is CRA, but it's really finance that makes these rules. I sound like I'm blaming CRA for everything. Basically, if you're enjoying yourself and having fun, you're only allowed to claim 50% of it. So food, beverages, and entertainment. This would also apply to club memberships for sporting, recreational, or dining facilities. Actually, the membership for those, the deduction is 0. The only thing I can think of anymore maybe would be a membership at a golf club, where you wouldn't be able to deduct the membership itself, but if you're going there for business purposes and have to pay green fees, that would be part of the meals and entertainment, and you would be allowed 50% as a deduction on that one. And if you're a GST, HST registrant, which I will talk about at the end, a little bit later, then the GST input tax credit is on meals and entertainment is only 50% as well. And the other 50% that you're not allowed to deduct or claim back as an input tax credit, you're not allowed to claim it as a business expense either. It's just kind of lost on you. Yeah, that's all the fun of the meals and entertainment. So contributing to CPP, this is a requirement on your, and it happens on your personal tax return, and it's on your net self-employed income. So I mean, obviously, if you're in a loss, you're not going to pay anything in. But if your net income is over anything over $3,500, you're going to contribute to the Canada Pension Plan. As a self-employed individual, you pay what would be the equivalent to the employers and the employees' share of that CPP. So 11.4%. So 2022, it's 5.7% times 2, and that increases to 5.95% in 2023. And I suspect it's going nowhere but up after that. So the only good thing I can say about that is that you're at least contributing to your retirement. And you will see a little bit of that money back then. If you have employment income as well as self-employed income, and if you max out on your employed income on the CPP, then you're not contributing any more than that on your self-employed income. So the maximum contribution that you can make is on like about $66,000. So as a self-employed individual in 2022, if you maxed out the CPP earnings, it's just about $7,000 that you would pay for the CPP, and that's paid through the tax system. It's getting expensive. There are options. There is an EI program available for self-employed individuals. I personally know of only one person who's self-employed, who has elected to go into the EI benefit or program for self-employed individuals. And that's because they planned on going on maternity leave more than once while they were self-employed. So the benefits are limited in what you can claim on. And the next slide will give us what those benefits are. Or what the conditions are when you can draw on those benefits. But basically you get up to 55% of your earnings to a maximum of $638 a week. That's the benefit that you receive. You will pay the premium when you file your tax return each year, and right now it's 1.58 per $100 to a maximum of $952.74. It's not horrible, but if you're never going to be able to draw on it for any of these other reasons, there's probably other programs that you might want to put your money in personally to save for that. So some of the benefits: maternity leaves, parental benefits, sickness benefits, compassionate care, and then family caregiver for children or for adults. And of course, I think it has to be long. You have to be off for more than the 2 weeks before you can apply for the EI benefits. Once you start using these benefits, you apply once for these benefits, you always have to pay into the EI program forever and ever. You cannot get out of it. You can go into the program, pay the premiums, you don't have any benefits, decide this is not for me, then you can exit. But if you've ever made a claim for any of these reasons, then you're in it for life. And so lots of time, I don't see people paying into this because you don't get very much money when you draw on it, and it is based on your earnings. It's not like the maximum is 638, but that's 55% of what your earnings would otherwise be, as shown on your tax return. So bit of a challenge there. I'm not convinced that it's a good program. So tips to dealing with CRA. I don't have a lot to say on this. I will say they've been kind of quiet in the last couple of years as far as asking questions or doing any kind of audits. But I think that's because of the pandemic. Most CRA employees were working from home, and they would just do high risk areas, I guess. And I think CRA is kind of moving towards the high risk areas, doing kind of a risk assessment as to where to audit. So they tend to do projects. I know a project they've been working on for a couple of years is vehicles, whether it's a 10.1 or a 10. So depending on the value of the vehicle. I know one of the other projects that they have been and are working on now is tips for service providers, wait staff, or spa people, that kind of thing. So my best advice is keep accurate and detailed records, and you need to keep them for 6 years after the period to which they relate. CRA, if they're going to audit, they generally will only audit the current and previous year or the previous 2 years. They're not likely to do, they're not necessarily going to go back any farther than that. unless they see a really big problem. But you're still required to keep the documents for 6 years. In the case of a CRA audit, if you're nervous at all, if you're anxious at all about it, get help from a tax professional. They don't scare us. And only provide the information that they've asked for. Don't try to be helpful by giving them extra information, because you're probably going to end up just, fueling their fire. But answer the questions, respond to all of the questions. And then make the process easy and review the findings. So if they do come back and say, we're going to disallow these, just have a look at it. If it makes sense and you agree with it, then fine, they'll do the assessment and you pay the taxes. If you're not sure if they're right, or if you just want to have somebody else have a look at it, if you haven't gotten a tax professional involved to start with, get one then, for sure. So, I will say, if we prepare your tax return, and I'm not necessarily doing a sales pitch there, but most accountants that do tax returns, if CRA requests information to verify, we'll work with the auditor in order to get that information and to answer their questions, and review their findings. Okay, I'm getting a little closer to the end here. So GST, so GST and PST. GST is going to be maybe a bigger issue than PST, but I'm going to go through the PST too, because there may be some implications there. I feel like I'm stating the obvious. GST is a sales tax on most goods and services. And in some provinces, it's harmonized, so it's the HST. So I think right now that would be Ontario, 3 provinces in the Maritimes, and then of course Quebec has their own QST, which is totally different. Same principles, but slightly different rules. So if your income is greater than, if your net sales are greater than 30,000 in the previous 4 calendar quarters, so it's kind of a rolling year, then you would be required to be registered for GST if you're providing services that are subject to GST. And I would venture to guess probably most of you would be. Could be. So if you request, if your revenues are less than 30,000 in the year, in the previous 12 months, 4 calendar quarters, you're not required to be registered, but you can opt to, you can voluntarily register for GST. And why you might do that? Maybe a couple of reasons. I don't know if it would be as important in your industry necessarily, but some people register for GST because then it makes them look like they're bigger. It takes away if you're not registered for GST, everybody knows you're making less than $30,000. So it takes that away from it, right? In some other industries, some people won't work with anybody if they don't have a GST number. Makes them look bigger, more legitimate. I don't know. I think that's just perception, but So if you decide, the other reason that you may want to voluntarily register for GST is if you're registered for GST, you collect GST. You also get the GST back on the expenses that you paid for to incur that income. So it's GST collected minus the GST paid. You remit the difference or you get a refund. So if you're buying some assets and think you're pretty close to being required to be registered, you may want to consider registering before you purchase that asset. And if you're voluntarily registering, the date of the registration is either the date of the request or up to 30 days prior. CRA won't allow it more than 30 days ago unless you were required to be registered. And then so you would have to prove that you had more than $30,000 in sales in the previous 12 quarters. 4 calendar quarters, sorry. And then if you decide that you want to be registered, you do collect and remit the GST. You file the GST returns on a regular basis. And I would say generally that's going to be annually, due at the same time, well, probably due by March 31st of the following year. And you must stay registered for at least 1 year before you can cancel your registration. So once you get into the system, you're there for at least a year, unless you stop your commercial activities. Right?
Sandra, I have a question.
Yeah.
So with my play coming up, I have some merchandise that I'm selling. Do I charge both GST and PST on that? And it's a minimal amount. So I mean, I'm certainly not getting anywhere near the 30,000.
Are you registered for GST?
No.
So the gross sale of the merchandise will go into your total sales in determining whether you are required to be registered for GST.
Mm-hmm.
So if you're not registered for GST and the sale of that doesn't make you be required to be registered for GST, no GST.
Oh, so I wouldn't charge GST on it or PST?
No. Well, no GST.
Oh, no GST.
Because you're not registered for GST, right?
Okay. All right.
Yeah.
But I would be charging PST and remit that?
Well, PST, maybe.
Can I make things a little more complicated, Sandra?
You could try.
For all of the productions that On Cue presents, the artists receive 100% of the box office. At the point where people pay for the tickets, any GST or PST that is needed is paid at that point. We're not sure whether our income this year is actually going to be sufficient to require us On Cue off the top to charge the PST or not, but we're contemplating that. But I'm just wondering what happened. How does that money, we then turn around, On Cue collects that money through our ticketing service, and then it turns around and it pays out the cash to each of the companies that perform. So I guess I'm wondering where that money is positioned in the tax returns of artists. And I'm just wanting to understand, to make sure that what we're doing is the best kind of approach for the artists.
It's definitely a complicated question.
I thought it might be.
And I'm not sure I'm going to be able to answer it with any authority
Okay.
off the top. I guess you have to look and see from a GST perspective, if you're collecting these fees in your capacity, like in an agency relationship, or if you're collecting it on your own and then your expenses, whatever you pay to the artist. Those are kind of complicated rules a little bit.
Okay.
Yeah. And then there's also direct, no. Like a market like a market mall, like an online store, like Amazon. I can't think of another one where Amazon sells for its different vendors, and it's up to the vendor to ship the goods that are ordered, but it's Amazon that collects the fees, and they would be required to collect the GST whether the vendor was registered for GST or not. So I don't know if those rules might.
I suspect that the Amazon example is really quite parallel to our situation. Our goal is to incur any expenses on behalf of the artist, or any expenses that the artist might otherwise be expected to incur. OnQ's goal is to incur those costs and then return to the artist, the profit.
The difference.
Yes, that's right. So
the other thing too, if you're a registered charity or a not-for-profit, that $30,000 threshold is raised to $50,000.
Yeah, and that's why we're just wondering it depends on what our box office is, whether we're going to run into the PST GST issue or not.
Yeah. I will say with the PST, they don't have a threshold. That 30,000/50,000 does not apply to PST. Basically, if you're in competition with other for-profit organizations and what you're providing is subject to PST, you have to collect it. There's no small supplier threshold at all.
Okay. I'll have to check with Landon about that. Thank you.
Yeah. And then as far as the PST is concerned, it used to be only on tangible personal property. But as we all know, the provincial government has changed that in the last 10 some years, and it's on certain services as well. For example, I have to charge PST on my services.
Right.
And I know that there was just some legislation introduced and perhaps implemented with respect to admissions to places of amusement.
Yes.
And there was also a reversal of some of it. And as a registered charity, it may, or a not-for-profit organization, you may be exempted from it too. So those rules are a bit complicated. So if you're not sure, then talk to your accountant.
Right.
Get some more details on that.
All right.
Yeah. But generally speaking, anybody who does business in Saskatchewan must have a PST number, whether you're providing taxable services or not. And the reason for that is to report PST on goods or services that you've purchased that requires PST if you didn't pay it to the vendor.
Yep.
So, for example, if you bought a computer from Alberta for business, you would have to self-assess the PST on it on your return. If you have subscriptions, monthly subscriptions to a taxable service, that and they don't collect the PST, then you would need to self-assess on it. So that would be like a monthly subscription fee for QuickBooks Online, for example, would be subject to PST. I believe that they actually collect the PST on it in Saskatchewan, so you wouldn't have to self-assess, but those are the kinds of things that you would need to do that.
Thank you.
I'm going to guess that most independent artists are probably not registered with PST, but probably should be. It's not something that I would say go out and do it because you must, but I'm just giving you the rules.
Right.
Yeah. And that is kind of the end of my presentation. So we've got tons of time for questions.
Sure. Sandra, I have a question. So what I've done for my play is to set up a separate account, but I'm not registered as a business per se. This is just, I've just registered a separate, or just taken out a separate account, so that all my expenses and revenues actually go through that account. Is that good enough?
Good enough for what?
So I don't go to jail, basically, at some point.
Well, I mean, you still have to do the recording, the record keeping on it.
Yes.
And you still need to keep the receipts.
Right.
I would say that's probably good business practice, because it keeps your personal separate from your business. And if you're looking at the bank statement and you know, making sure that you've recorded everything in there, then you or your bookkeeper's not wasting their time on personal expenses, and you're sure to capture all of your business expenses. Yeah.
Yeah, I've been pretty good at keeping track of all that. And, you know, I was quite surprised because actually I do have separate spreadsheets for expenditures and for revenues. So the two of them are kept separate.
Yeah, yeah. They're just kind of easier. It's kind of easier to see. Yeah. Yeah.
Okay, thank you.
Yeah, you're welcome.
I feel really foolish asking this, but I've been getting the runaround from the CRA on it. So
Okay.
I'm just wondering that, I guess, clarifying the difference between professional versus commission income and where you should be claiming your income. Because they said, well, it really depends. And they're like, we don't really know artists. And so I kind of had to take a guess and just cross my fingers that I did it right.
Probably more professional.
Yeah, that's what I leaned towards. I was like, just in case, but yeah.
So commission would be if you get a percentage of the sales you make for another company, right?
Okay.
Or if you're selling.
Right. My mindset was on its commission-based work in a way, you know, as opposed to being commissioned from. Yeah.
No, it would be how much, okay. Where do your revenues come from? If it's a percentage of sales that you've made in an agency relationship, if I can use the technical terms, then you would use the commission.
Thank you so much. That clarified it so much faster than the hours spent with CRA.
Yeah, sometimes I think the difference, like on the business statement, is whether it's like a business or professional.
Yeah, and I figured that business was more towards having employees, so that's why I lean towards the professional side.
I'm not necessarily having employees, but but selling products or having multiple customers.
Product versus services kind of thing.
Yeah.
Okay.
Yeah. And honestly, I don't know that it matters. Like, as long as you've reported the income and the expenses that you're allowed, you should be good, right?
Yeah.
Yeah.
Okay. That's a comfort. Thank you so much.
Yeah. Okay. Any other questions that you have that CRA's given you the runaround on? I like answering their questions.
I have another question,
Yeah.
Sandra. So I took retirement several years ago. Now I find myself in a position where I actually have several jobs that probably amount to full time. Is there any way of deferring revenue for the years, like spreading it over future years or something like that, as far as tax is concerned, so I don't get walloped?
No.
Okay.
Like, I think years ago, and it would be before my time, I think in certain circumstances you could do 5-year averaging, but there's nothing like that anymore.
Okay.
Yeah.
All right.
Just don't do the work.
Okay. Not possible.
No. Okay. All right. Wow.
Okay. All right. Thank you.
This isn't entirely Brad's question, but you touched on this a little bit earlier, but I'm just, a lot of artists are doing like research and development work for which they may get some grants in 1 year. And then in the next year, if they're lucky, they may actually do a production where there is revenue, or it could be the year after that. There isn't this this kind of steady source of income.
Yeah.
It's sort of on again, off again, and you invest your time and you get a grant income to do something perhaps, but it makes it a little tricky to claim your expenses against an income which is forthcoming. So I asked the question about carrying forward expenses. It also involves getting income that you could charge against your expenses in, down the line. So I wonder if you could talk a bit about projects that cross over multiple tax years and strategies around how you deal with that.
Sure. So if we're talking about grant income and it's a 2-year project, or starts in 1 year and continues into the next calendar year, you could certainly defer some of that revenue into the next year to the extent that the work has not yet been done, that the income's not yet been earned on it. Now, how do you do that? I mean, it could be time spent, like how much time you're supposed to spend in total on this project to earn that income. And maybe you've only put 40% of your time in this year, so you could defer the other 60% to next year. Maybe you do it, maybe it's expense-based. I mean, if it's if it's research, you may not have many expenses to go against it, but you also might. So if you've got a budget for the expenses and you've only spent like 30% of your expenses, maybe you claim 30% of the income in the grant this year and defer the rest until next year.
Okay. This can get complicated. I'm thinking particularly about writers
Yeah.
who, you know, they may spend 3 years writing something, and then their income will come in and dribs and drabs after that.
Yeah. So, so generally speaking, then, and artists, CRA's view on artists is that they have an expectation that it's going to take longer to earn or create income from these expenses. So you could have 3, 4, 5 years of losses while you're developing this piece that is going to give you revenue for the next 20 years. The expenses, though, need to be claimed in the year that they're incurred. Yeah. So, I mean, the good thing on that is that if you have no income, you've got a business loss, you can claim those expenses against other sources of income. Yeah. If you have no other sources of income and you're just creating a loss, you can carry that loss forward and use it in future years.
Sorry, Sandra, I'm not sure I perhaps understand you. So if you are a writer part-time and you work in a job the rest of the time,
yeah,
and you have a net loss for 2 years running as a writer because you have no income, you're working on something that's going out.
Yeah.
You can actually claim those losses against the job that you have working for somebody else?
Yes.
Oh, I didn't know you could do that.
Yeah. Yeah.
Oh, that works for something like a pension as well?
Yes. Yeah.
Huh.
Because it's earned it's earned like employment income is earned. Yeah. But you can apply it against pension income as well. Yeah.
Okay. So if I have, let's put it in the worst case scenario, if I have the beginnings of a rough draft, not even a complete rough draft, by the end of December, but obviously have at least another year, if not more, to go with the writing project. I can still say I spent this amount of time working on it, and I can, yeah, okay. Wow, thank you.
So if you're claiming home office expenses against that, you can't deduct them that year, but you can carry them forward. Those ones can be carried forward.
Right.
What kinds of expenses would you incur as a writer? Like,
well, I'm not actually a writer, I'm a dramaturg, so I have another set of expenses. But for instance, what the people that I work with, they take trips to do research.
Yeah.
I work with somebody who writes about whales. She goes to Wales regularly to do research for what she's writing.
Yeah.
So that is something that she can claim.
Yeah. So when you're talking about travel and trips, that is going to be a CRA audit trigger or question. So you need to, I would suggest that you would ask yourself to start with, what is the main purpose of this trip? Am I doing this because of business? Or am I going to do business because I want to go anyway?
Yeah.
I want to go personal. So if the main purpose, the original purpose of the trip is for business, then you're probably good to go with all of your expenses. If you're taking this trip anyway, and you're just going to do some business on it, I would just claim expenses specifically related to the business. For example, if you do I don't even know, hire a boat to take you out to where the whales are, and you hire somebody to guide you or give you information or help you answer questions that you're going to have while you're out there, those would be business expenses. But the flight there or the trip there may not necessarily be considered business if you were going to go for a holiday, to visit family, whatever, right? So trips can be deducted. And if the main purpose is business, and that's, the only expense you have because you don't have a product yet to sell, but it's the start of it, then yeah, you can deduct it.
Yeah. I suspect paying for somebody who's a mentor or consultant or editor or whatever, those in that context, you have an invoice and it's a pretty forward expense to use.
Yeah.
But okay.
Yeah.
I really appreciate the difference between whales and whales in this conversation.
Yeah. I don't know whether anybody has any more questions, but Sandra, you might stop sharing your screen there and we can all kind of look at it.
I don't know if I can.
You should be able to just log
Got
off.
it.
Yep,
I got it.
Yeah, I was just saying, like, a writer actually talking about going to Wales might be actually going to research locations. They might be going to research even just getting the sense of a certain area that they might be writing about. They might make a trip to the British Museum if they were looking for some historical stuff that they were interested, or the British Library. And what kind of expenses would that, would that sort of cover the trip? Or would you say, okay, I spent 3 hours climbing mountains in Wales, and that is for my for my project. So 3 hours at such and such an expense, or what I was paying myself for. Would that kind of work?
So in the context of, like, as a percentage of the whole cost of the trip,
or something like that.
Yeah, you still have to go back to the main purpose of the trip in order to claim that flight at all. The main purpose has to be business. If it's personal, if the main purpose of the trip was personal, vacation, visiting family, whatever, right, then you can't claim any part of the flight. But so it's considered personal. You go there, you're not deducting the flight. You go into museums, you pay admissions, whatever. Those specific expenses can be claimed. And I would say probably 100%, although you might get some personal enjoyment out of visiting those museums or whatever, right? But if you're doing, like, the research for your project, then you should be able to claim it.
Yeah. There was also a comment here about a writing retreat, but I would imagine a writing retreat is pretty straightforward. If you've applied, you've been accepted, you might have a scholarship, or you might have some travel expenses to get to that writing retreat. Those would be expenses you could claim.
Yeah. And I would say the main purpose of that trip is business. And I don't know that anybody would question that, although you never know what CRA auditors are going to say.
slight segue. May I ask what your fees are for asking a question? I have a question that is not directly related to self-employment, and I would love to pick your brain because I am not getting a whole lot of nowhere right now.
You mean now or later?
I mean later, because I don't want to like waste everybody's time here.
Oh, yeah. You know what? Just shoot me an email with your question if you want, or we can set up a time where we can chat. I don't charge really for just asking questions.
Okay.
Unless I have to do some research or do some work on it, right?
Right. Okay, great.
So I would have that conversation with you first to see what it is, but shoot me.
It's one question, but who knows how complicated it'll get. So
right. Yeah, it's an easy question, but my answer is usually, well, that depends.
Yeah. Thank you. I appreciate it.
Yeah.
All right. Are there any more questions from people? If not, I will let Sandra go and thank everybody for attending today. I just want to let those people who are attending today know that this is probably the last one for December. However, we have some coming up in January. We have intercultural ethics coming up on January 14th with Taiwo Afolabi. A sonography workshop with Beth Cates on February the 4th. And a workshop on breaking in presented by Heather Kant and Jennifer Bruin on how to break into or how to be able to work in Persephone or the Globe Theater. And then on March the 4th, we have one on producing with Heather Irvin from the Globe Theater. And I'm hoping to nail down one on accessibility as well. So that'll be sometime in there as well. So I hope you can join us, and please tell your friends and colleagues and actors and actresses across the province. These are great workshops and very worthwhile. Once again, thank you, Sandra. Thank you, Barb and Brandy, for your interpretation. That was wonderful. Thanks so much.
Thank you.
Thanks, everyone.
Thank you. Thank you very much, Sandra. That was just great.
You're welcome.